Hi, welcome back. Big news story the last 2 weeks, of course, has been Twitter and Elon Musk's attempt to take it private. Now, I'm fascinated with this story for a couple of reasons. The first is I'm not a big user of social media platforms. I'm not on Facebook. I lurk on LinkedIn, but I hardly ever post. But I do post on Twitter. In fact, my first tweet was in April of 2009. That makes me ancient by Twitter standards. I don't post very often, at most 10 times a month, maybe more often 4 or 5 times a month. I follow only 3 people, 3 of my 4 children. My 4th child has not rejected me, but she's not on Twitter. But I am fascinated with the platform. I'm also fascinated by Elon Musk and his biggest creation, which is Tesla, which I've valued multiple times before. When the two come together in a story, it's almost impossible for me to stay away. So when I heard that Elon Musk had acquired a 9.2% stake in Twitter just over 2 weeks ago, I wanted to look at what was driving the story. And the story has only become more interesting since, and it's a story that's got everything in it. It's got a little bit of investing, a little bit of valuation, a lot of politics. It's a kind of microcosm of the challenges we face as a society right now, all playing out in one acquisition. So enough lead in, let's talk a little bit about how Twitter got to where it is today. To understand the Musk attempt to acquire Twitter, you got to go back to 2006 when Jack Dorsey, Noah Glass, Bistone, and Evan Williams created the company. Its platform went public, was launched later that year, and it worked really well at attracting users. By 2012, it had 100 million users, and by 2013, when it went public, it was close to 240 million users. And it was a time when investors were clearly attracted to social media companies. Facebook had gone public a year before, LinkedIn about a year and a half prior to that. So clearly there was a thirst for other social media platforms that people could invest in, and Twitter took advantage of it. Now, I actually tried to value Twitter in early October of 2013, right after they filed their prospectus for their IPO. So before the bankers had set their pricing. And the story I told about Twitter was an upbeat one. I started with the recognition that this was a company with lots of users that hadn't figured out how to monetize them yet. And in my October 5th, 2013 story, I assumed that over time they'd figure out a way to monetize these users. What does that mean? That they'd find a way to convert users to revenues. If you see my projected revenues, this is my 2013 valuation, over the next decade, I see those revenues climbing to $11.1 billion. And over time, I also assumed they'd find a way to turn losses to profits by targeting an operating margin, a healthy one of 25%. Based on that upbeat story, the value that I got for Twitter was about $17.36. False precision, around $17 if you want to latch onto that number, or an equity value of about $10.8 billion. That was my October 5th of 2013 valuation. Now, in the weeks after, the bankers who managed Twitter's IPO priced the company initially at about $20. But they pushed it up to $26. That was the official offering price set at the start of November. On November 7th of 2013, the stock went public. And it broke through the offering price. It opened at about $45, and the momentum kept taking it up and up and up. And by December 26th of 2013, this is barely 7 weeks after its IPO, the stock was trading at about $73. A high watermark that would last for almost a decade. And think of that as the best part of the Twitter story. If you stop the story here, it's a success story. Jack Dorsey would be lauded as a great founder, but the story continues. If you look at the post-IPO era, Twitter's had some successes and failures. Let's start with the successes. It's been able to continue to build up its user numbers, perhaps not with the growth rate that some thought that it would accomplish, but still pretty healthy. And starting in about 2017, the company's also kept track of what it calls daily active users. The practice that many social media companies have adopted to recognize that not everybody in the platform actually interacts with the platform. And the number of daily active users at Twitter has actually been climbing at a much faster rate than total users. So that's success. And along the way, Twitter has become ubiquitous. It's become part of almost everything we do: entertainment, news, sports. And it's attracted people who have used it to build their personal brand names. And if you look at the top 20 people on Twitter with the most followers, you see a mix of politicians, musicians, celebrities, sporting figures, all using Twitter to build up their brand name. There are a couple of businesses / brands that are also on that list. YouTube is one of the most widely followed Twitter handles, as is CNN Breaking News. But it's worth noting that it's not that many of the people on this top follower list actually tweet very rarely. Barack Obama hardly ever tweets, and when he tweets, it's pretty low key. It's more pablum than any news breaking tweets. So it is, and that's a practice that many Twitter users seem to have adopted. Most of the people on the platform, which might have 200, 250, 300 million, and most of those people either never tweet or very rarely tweet. The bulk of the tweets on the platform come from a small subset of people, a subset of users, with 10% of the users accounting for 80% of the tweets. Now, along the way, Twitter has gathered a user group that is a little different from other social media platforms. A couple of years ago, Pew, which surveys Americans, looked at, and this is just for the US, looked at the composition of users on different platforms. And if you look at Twitter and compare it to either the general population or to Facebook, Twitter is more male, much younger than a typical user on the other platforms, is more educated and more liberal. It's something to keep in mind when you look at the reaction that you've seen on Twitter to Elon Musk's attempt to take it public. So with that lead in, let's talk about what's not gone well for Twitter. It's not done very well on an operating basis. If you look at its revenues, it had trouble getting its revenues off the ground in spite of having that large and engaged user base. And even though it had a really good 2021, over time its revenue growth has not been that impressive relative to other companies in that space. For much of its life, Twitter struggled to make money. It's finally making money, but its margins are again relatively low. But that does not allow for the fact that one big expense that Twitter has is R&D expenses. And if you clean up for R&D and treat it as more of a capital than an operating expense, its margins look a little healthier, but still not as high as the most successful players in this game. Facebook, for instance, has 45% margins. So it's lagged in terms of operating history. And the market's been disappointed. The way it's shown up is, if you look at the stock price, which peaked at 73 in December of 2013, dropped and continued to drop, hitting lows in the mid-teens in 2016-17, made a bit of a comeback in 2021, reaching a high of $77 in early 2021 before dropping back again down to the 30s or the 40s. So the time that Elon Musk expressed his interest in buying Twitter, the stock was trading around $42 per share. So here's where I think a comparison to Snap might be an interesting way to start this discussion. Snap, I think, among the social media platforms, is the one closest to Twitter in terms of size and reach. Snap has more daily active users, but its revenues are lower and it's still losing money. But the market seems to be much more upbeat about Snap than Twitter. If you look at the market cap for Snap, it's about 40% higher than the market cap for Twitter, or 60% higher if you compare it to the Twitter market cap. It might the market's paying roughly the same amount per daily active user, but much more as a multiple of sales. Now, there are two ways you can explain the more upbeat view that markets have for Snap. Maybe they see a better story from Snap that they think will yield more value. Or more troubling, they don't think Twitter's management is really up to the task. Something that's going to become part of what we're going to talk about next, which is, how corporate governance at Twitter has kind of evolved over the last 16 years. For a company that's been around only 16 years, Twitter has had 5 CEOs. The same guys come back a couple of times, but five transitions in CEOs. When the company started in 2006, Jack Dorsey was the CEO. He was pushed aside by Evan Williams, his co-founder, a couple of years later, still as a private company. Then Jack came back. And when Twitter went public in 2013, it was Dick Costolo who was the CEO. Neither Dorsey nor Williams was the CEO. Now, it's to give Twitter credit, when they went public, they did not use the model that other social media companies like Facebook and LinkedIn had used of different voting rights for different shares. They actually had shares which had equal voting rights. That's a good thing. But perhaps it reflected the lack of trust even among the founders to give anybody extra voting rights. The corporate governance issues, though, at Twitter didn't end with going public, because Dick Costolo was pushed out by Dorsey for whatever reason. For a couple of years, Dorsey's founder status gave him some cover, but the opposition started to kick in just as the operating metrics were not measuring up. In 2020, Elliott Management, an activist hedge fund, actually bought 1 billion shares of Twitter stock and pushed for change. They got a director on the board. And Dorsey seemed to win that battle. At least he pushed them away from the door. And it looked like he'd kept his position. But in November of 2021, a surprise to pretty much everybody, Dorsey announced that he was stepping down. And now, while the full story is not right, it's quite clear there's been a rupture between Jack Dorsey and the board of directors of Twitter, and they replaced him with Parag Agrawal, who has been at Twitter since, is an insider, has been at Twitter since 2011, has been their chief technology officer since 2017. So that's where Elon Musk enters the game. On April 4th of 2022, Musk announces he's acquired 9.2% of Twitter. And then things go into hyperspeed. A day later, Parag Agrawal announces that Musk has agreed to join the board of directors at Twitter, and that seemed to be a way in which you could co-opt him, because as a director, he was restricted from buying more than 15% of shares. He couldn't obviously speak out about the company, because as a director, you can't say mean things about the company. 5 days later, Musk reversed his decision to join the Twitter board. It's not quite clear what happened between the 5th and the 10th. Though there were some tweets that were sent out by Musk in those intermediate days where he suggested things like, Twitter headquarters be turned into a homeless shelter, something that a director on a board would not do. On April 14th, Musk announced, again out of the blue, that he was going to acquire all of Twitter for $54.20, about a $12 premium over where the stock was trading, which was trading at $42, and take it private. 1 day later, the Twitter board meets and votes to add a poison pill, where if Musk got up to 15% of the shares, the bid would blow up, because other shareholders would be able to buy shares at a much lower price, and he'd have a tough time getting to 51%. In the weekend that followed, other private equity investors, Silver Lake was one of them, announced that they might be interested in buying Twitter. On the 18th, Musk hinted on Twitter that he might make a tender offer. How would that help? With a tender offer, if you buy enough shares, you might be able to put pressure on the board to remove the poison pill. And this morning, of course, Elon Musk announced that he has funding secured for the deal. I'm not sure with Musk what funding secured actually means, but things are moving at hyperspeed. So let's step back and look at the arguments and the counter arguments that are being made here. Anything that Elon Musk is involved in is not going to be conventional. But what's happened in the aftermath of his bid is a fairly conventional response and counter response. So when Musk announced that he would like to acquire Twitter in a hostile acquisition, the company's initial response was that its shareholders would be shortchanged, that he was offering too little relative to what Twitter was worth. We'll come back and examine that argument. Musk's pushback was, hey, that might be true, but do you really trust this existing management to be able to deliver that higher value? So for perhaps the first time in the last decade, shareholders in Twitter will get to decide who to trust more. Should they go with the existing management with their pitch, or should they go with Elon Musk, or somebody who makes a pitch just like Elon Musk that the company needs to change? So let's start with this argument that the company was making, that Musk's offering price for the company, $54, was somehow a lowball offer. Well, that can happen sometimes, right? If you have a company that's being significantly undervalued by the market, the price being offered by an acquirer might be lower than true value. The only way to answer that question is to value Twitter. And I did on April 4th, at the time that Musk announced his initial 9.2% stake. So I'm going to take you through my valuation, but this valuation is a status quo valuation. What does it mean? It reflects existing management running the company with the 2021 upbeat numbers and a new CEO, Parag Agrawal, in place. And here's the story I'm telling about the company. I'm starting the valuation off with the base year being 2021, and I'm saying, look, perhaps the company's finally found a way to monetize its users. So if you look at my projected revenues, they're starting to climb again. In fact, the revenues that Twitter actually announced in 2022 of 5.1 billion is well below what I projected they would make in my 2013 forecast. But again, hope springs anew. I'm giving a new lease of life, and revenues will climb to 12.9 billion. If hopefully by in my new story, they'll find a way to get to that 25% that originally targeted. So revenues go up by more than 100%. Margins improve. And with that story of existing management continuing to kind of build on the model and monetize users, the value that I got per share was $46 per share. That's true. I am making assumptions. So I did build in a simulation where I allowed my margins, my growth, and my cost of capital to come from distributions. And in the results of the simulation, kind of back up what I see in my base valuation. What do I see? I see a value for a company that's slightly above the $42 the stock was trading at, but below the $54 that Musk was offering. So the notion that this is somehow a lowball offer relative to some intrinsic value coming from the existing, I don't see that. I think, in fact, what Musk is offering is closer to the 75th percentile of value, not the 30th percentile of value. So the argument that this is somehow a lowball offer very quickly falls apart if the existing management plans to keep doing what they're doing. Of course, the pushback from existing management is there's potential here. That if they change the way the platform is run, it could be worth a lot more. You know what? Elon Musk would probably agree with that statement, and where we would disagree with is who can accomplish that change. And he would argue that he can make that change much better, and perhaps some of these changes need the company to go private. Now, each side, as they're making their arguments with stockholders, have weak links. If you look at Twitter's management, I think the weakest link in their argument is when they say we can run this company better, the pushback will be, you've been running the company for the last 9 years. After all, Parag Agrawal was in the company, even if he wasn't CEO. Why all of a sudden are you finding new ways that you can run the company? It sounds like a deathbed conversion to me. Elon Musk's problem is we're never sure what exactly his end game is because he's unpredictable. And I don't mean that in a bad way. That's what he's been all through his the last 15 or 20 years. We've seen him in markets. People are not sure whether he really means to take the company private. So there's worry about is he going to be, and if he does it, how the heck is he going to pull off running the company in addition to running $1 trillion company in Tesla, not to mention SpaceX, Boring, and all the other ventures he has. Sounds like he has a lot of balls in the air. And the other question is, can he get the funding lined up? I mean, and I think that's, of all the problems, I think that's the least of his problems, but I think there are issues of do people believe that he actually means what he says? And the fact that the price has stayed around 42 even after his bid suggests that markets have their doubts about whether he'll carry this through. Now, I'll lay out how this story can potentially end. And I see 4 possible endings. And I'll also list out what I think are the highest odds and the lowest odds. One is maybe Twitter, with its poison pill, fights off Musk and the existing management go back to their plans of running the company with incremental change. Maybe over time, revenues will increase, margins will improve, and that'll unlock share value. That was my $46 valuation, but maybe that's one option. The second is Musk is able to get the board to remove the poison pill, either with a tender offer or some other pressure, and then he takes the company private. The odds are against it, but this is, after all, Elon Musk. He's done impossible things before. The third is the company stays independent, but with significant changes in the way it's run. I think if nothing else, the last 2.5 weeks, Twitter's management and board of directors have not covered themselves with glory. I mean, after all, they have a history. They've gone through 5 CEOs, and maybe at the end of this process, what people will conclude is that the dysfunction at this company lies with both the board and the CEO, and that maybe what the company needs is a new board and a new CEO. So maybe enough institutional investors who own shares in the company will get together and push for change in the company, independent with different people running the company, and perhaps that'll open up the potential. But there's a fourth possibility, which is Musk gets pushed away by the board, but somebody else, a private equity investor like Silver Lake, like an activist hedge fund, ends up doing what Musk had planned to do, which is take the company private, make the changes that need to be made, and then take it back public maybe in a few years. If that happens, of course, Elon Musk will have accomplished what he set out to accomplish without having to spend the $43 or $45 billion along the way, or having to deal with the distractions of owning Twitter. Because if you're a Tesla shareholder and you love Elon Musk, I don't think you want him to be holding Twitter as well, because I don't see how this can help Tesla. If anything else, the controversies that Twitter will bring with it can spill over into the rest of what Musk owns. If you ask me to rank these 4 alternative endings in terms of odds, I would say the highest odds are on 3 and 4. That's either somebody else acquires Twitter or Twitter stays independent with somebody else running the company. I think that the status quo and Musk taking the company private, I would attach much lower odds to. But the story is still being told, so let's see how this plays out. Now, of course, in all of this discussion, I haven't talked about the elephant in the room, which is this is not so much a story of finance and markets as it is a political story. Let me explain. We live in a world where everything is red or blue. There's this divide down the line. You tell me which side of the divide you fall on, I can probably guess with a fair degree of certainty what you think about this deal. So if you fall on the red side of the divide, you probably think this is a great deal, that Musk should take over the company. If you fall on the blue side, you think it's a terrible deal. And I won't tell you which side I fall on, but I think there's a lot of hypocrisy or unrealistic thinking on both sides. Now, if you're opposed to the deal, you're making up stuff. You say it's because you don't like billionaires owning media platforms, but you're making the argument in the Washington Post, which is owned by the second wealthiest man in the world. And I would have a question for you. If George Soros were mounting an hostile acquisition for Fox, would you feel the same way, that billionaires should not own media companies, or would your views be different? Now, if it is Musk specifically that you're opposed to because you think his personality is unsuited to being allowed to run a media platform, well, if that's a test we're going to run, shouldn't we be running it for all owners of all media companies, whether their personalities are suited to being owners? So you're opposed to the deal. You might want to look at your arguments and see whether they're being driven more by your political views than by views about who should run media companies or how should they be run. If you're for the deal and you want Musk to win this because you think he'll make it a bastion of free speech, you need to think again. You cannot run a social media platform where everything goes. Right? For legal reasons, for self-preservation reasons, there's going to be censoring. Maybe what you're hoping for is more even-handed censoring on both sides. But I think that it's going to be a mess no matter what. That there is going to be no pure free speech platform. And I think it has to be clear that there have been attempts by people to create their own versions of Twitter. Parler and Truth Social. But the reality is, even conservatives come back to Twitter to make their views made because they get much more exposure. It's surprising, and it's funny that many of the people who complain about Twitter and how it's being run do it on Twitter. And I think it reflects the fact that it remains the place you're going to go if you still want exposure. So I think at the end, a lot of what you see as for or against this acquisition have nothing to do with the valuation or investing side. They come from politics. There's one thing, though, that I want to talk about that I find a little, especially among people who oppose Musk taking over Twitter. They seem to have somehow elevated Twitter to this national treasure that needs to be preserved, that Twitter is some magical place where great things happen and that Musk is going to ruin it. I beg to disagree. It's true that the brevity and the timeliness that the Twitter platform allows has made it a great place to go get breaking news. I get more of my breaking news on Twitter than I probably do on any news platform. And I'm sure there are some people who come for the breaking news part and maybe the witty tweets and retweets you get. But the truth also is a lot of people who come to the platform come for the impulsiveness that Twitter encourages and the kind of tweets you put out that you regret the second you put it out. They come for the same reasons you slow down on a highway to look at a car crash. They come for, basically deranged conversations on trivial issues where people say things that they should not be saying in public. And we like to all complain about the ugliness and anger on social media, but without it, there would not be as many people on social media. In fact, if you think Elon Musk is the person not suited to run Twitter, I would push back. I would say he's exactly the kind of person that makes a social media platform run. He symbolizes strengths and weaknesses of the Twitter platform better than any other person walking the earth. So it's going to be an interesting coming few days. I can't wait to see how this story ends, but I hope you found this session useful, and I thank you very much for listening.